Hey everybody, AMRN. What a great day today. This one worked out very nicely. I want to go over this trade again and just show how the market moves and price action and how there's a rhythm to it. And a lot of people aren't believers in something like this. I obviously am. And I'm going to show you a little bit of something as to what it was that I was looking at and why I think this worked out so nicely the way that it did. First thing, and I'm doing this on a replay, so I'm only showing candles up until February 20th. And we're going to walk through it. I'm going to show you exactly how this thing moved and basically why it moved to a certain degree. First thing that I'm looking at right here is I can look at a very basic bullish pattern. It's called a bullish flag. Okay, I'm going from the lowest low to the highest high right here. And then I'm looking at just going from the tops right here. And you can see this little, kind of looks like a flag, right? Something like that. Now, the thing with a flag pattern is that typically the breakout, well, first off, you have this run right here, a big bullish run right here. This is the definition of a flag pattern, big bullish run. And then you get a lot of sideways trading right here. And you could also call this channel trading to a certain degree. So bullish run, sideways trading, and what typically happens is the breakout happens to the side of the original trend. So we had an original uptrend right here. We're looking for this eventually to break out to the top side going up this way, okay? So what we're looking at with this is, or what I'm looking at to begin with, is a break above and a close above this main level right here. That's my highest high. So have the market show you what its intentions are. Sorry about that. Have the market show you what its intentions are by breaking above and closing above structure levels and then looking for a pullback. And I'll show you what I mean by that. I'm going to hit play on this here in just a second here. And let's take a look and see what it does here. And again, over here, still trading a little sideways here. Still trading sideways. And any second now, we can imagine what's going to happen. Starting to get exciting right here, and then boom, right there. See, everybody see that? You get on the, this is an hourly time frame, so every candle's an hour. So that breaks above right here. And actually, if you can see what it did right here, this level of resistance right here comes up and it hits the level of resistance and it couldn't break through and it stopped, pulled back here. Hopefully everybody can see that. Okay. Then eventually on the next hour, it broke through and it closed above. Right there, the market is showing you its intention with this most recent level of structure that it wants higher. That is clearly what it does. Now, what you'll see on my post, it's kind of hard to describe and write it in there as I post it because there's nothing verbal about it, but what is formerly resistance, as we're looking at right here, resistance, and then it broke through resistance. What was formerly resistance now becomes support. And I'll show you what I mean by that. I'm going to hit play here. As it breaks through, break above, close above, still going up. And look what it's going to do. Keeps going up. And now we're starting to get a pullback, even more so. And let's see what it does. Did it make it all the way? Might not have. Go a little bit faster here. Oh, there we go. Okay, so it pulled back towards it. It didn't touch it all the way, but it got close enough. So now, after this move right here, and this is, I think this is where I entered. Yes. Okay, so boy, let's back it up here just a little bit. Nah, let's not. Let's just go with this. So anyways, so what I'm looking for right here, as I mentioned, it broke above, closed above this level of resistance right here. It now becomes support. Now I'm looking to get long because the market already signaled its intentions here. Okay, so now in order to get long, what I'm looking for is I'm taking my lowest low close of candle. That's my lowest close right here. This one closed at 1912. The high of that candle is going to be 1958. So I'm looking for a candle to close, go for a higher high, higher close above this lowest close candle right here. Okay. This candle didn't do it. This candle didn't do it. This candle did not do it. This candle right here closed at 1960. This high of my lowest close candle is 1958. That is my highest, my break above, close above candle, or my higher high, higher close candle right here. That's where I enter the market. Right here, my stops can go actually maybe a little bit lower. Stops are immediately going to go in that low right there. And now I'm into the trade. Now, I already know that the market signaled higher right here, so I'm looking for the market to continue going up north. And the way that I'm looking for, as far as where I'm looking for the market to go, I can take a look at it this way. I can go all the way back here to this original move, and I can measure this first move right here from the lowest low to the highest high, clone this. This is what's called a measured move or a harmonic move, and then I want to apply it to my lowest close right here. And the reason why I'm doing this is because I have a clear intention that was shown by the market to want higher. So now if I measure this move right here, this is called an AB equals CD pattern. This is A to B is going to be equal to C to D. Because of this break above, close above right here, this is where I think the market is heading right here. That's my target in terms of where I'm looking to sell. Another thing that I can look at that can help me signal what the market's intentions are is draw a Fibonacci retracement from the lowest low right here to the highest high right here. And I can see that I get that turnaround. It hit it several times at the 382, 382, 382, 382, and then we never got a 50% retracement. And then it turned around at the 382 and continued. A turnaround at the 382 retracement tends to indicate trend continuation. So that's just something else that I'm looking at that helps me think that this market is wanting higher, and I'm looking at this particular pattern. So as I look at things right here, now I'm involved in the trade, and that's my profit target right here. So let's hit play here. Keeps going. And I'm looking at something right here develop again. Yes, okay. So right here. Now, the market also moves in what's called fractals. And all that a fractal is a move within a move. Okay, we just talked about the AB equals CD pattern. Here's another one right here. Okay, if I measure this one out right here, and I'm actually going to measure that from here. Oops, sorry guys, I measured it the wrong way. It's a little bit of a gap above right here. What am I looking at here? Oh, no, jeez. Good grief. Excuse me. From here to here. Okay. So right there. So from my lowest low to my highest high. And if you can see it right there, there's a turnaround right there at 1920. That's right at the 382. And then we get the break above, close above. And there's another one happening right here. Everybody see that one? Broke above, pulled back, broke above here, pulled back. Where did it pull back to? What used to be resistance is now support. And now we're breaking up above right here. So I get another turnaround at the 382. So what do? I can measure out this move once again. It's a smaller AB equals CD pattern. Okay, this is what I mean by the market moving in fractals or moves within moves. This is another way. Now you can start to see, I start to get a little bit of confluence within this, what is now developing into a congested area right here. And rectangle. Somewhere right around here is where I'm starting to see termination of those 2 points. Somewhere in that area. It's not exact science. It just gives you a certain idea as to what you're looking at. Now, I pulled back right here. We talked about that one. Now, we broke above, closed above right here. Again, pulled back using the same technique, higher high, higher close candle. My lowest close candle is going to be, what's that one? Closed at 2047. 2047 doesn't matter. This one right here, well, that's your close candle, close above candle. That sometimes happens when you're looking for that confirmation candle. Instead of it being just a little bit above that lowest low candle, it turns into a big one, and entering on the market is a little bit difficult with that because it closed all the way up here. So your risk is now, your risk to the downside is, you're entering here and you look to put a stop about right here. So that's your entire amount of risk. If you want to measure it out, you're looking at least about 7.3% worth of risk to the downside right there. I get that that's not practical all the time, but sometimes that's just unfortunately how it goes. So I'm looking at a smaller AB equals CD pattern right here. Okay. Now I can go ahead. I'm going to do a part 2 to this video as well. Just I'm running out of time right here. So let's come back to that. I'm going to show you how I'm going to measure this move right here and give you more reason as to why we're coming to an end right here. You're going to want to see part 2. This is going to be really cool when we start putting it all together here in just a second. I'll see you in just a bit.